Do you want to get a home loan but have a 500 credit score? Have you got turned down from conventional funding already? Well, in today's video, I'm going to show you what an FHA loan is and how you can use it to get a home loan with a low credit score. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allowed you to put your credit repair experience into your own hands. In today's video, I'm super excited because I have a banger. In today's video, I'm going to show you exactly how you can get an FHA loan with a low credit score. This is going to be a game changer. And today I'm super excited because I have a special guest. We have a loan officer who cares in the building. The last video that he did had such a great response. We have so many people that reached out and actually use the services, ask so many questions. So guys, thank you for that. But before we get into the video, guys, please like and subscribe to the channel. It allows us to go to a wider audience. It allows us to get pushed through the YouTube algorithm and allow us to keep these lights on. Guys, please like and subscribe to the channel. Now, let's dive straight in the meat and potatoes. Let's dive straight into the first meat and potato. I don't really want to waste any time when it comes to this particular group of funding. FHA have been a game changer since it is actually being introduced. But I'm gonna introduce my special guest today, Loan Officer who cares, man. Go ahead.
Loan Officer who cares in the building. Thank you guys very much.
Yes, sir.
I appreciate the response to the last video, all the information that we gathered. So then I'm just here again, once again, to help you guys out. You guys on the path of home ownership.
For those that didn't watch the first video, tell them again who you are, where you from, and what you do. Just a quick segment.
All right, thank you so much. Loan Officer who cares. I've been in the industry for over 20 years. I'm a loan officer. You just go hashtag Loan Officer who cares on Google. You'll see a lot of information about me. I truly care about putting people in the homes and putting them in position to keep the homes because we don't want them to be house poor. And like I said, I've been licensed since 2013, and I've just been on and popping at it, and I just love what I do, and I care about the people, and we're here to make the process real simple for you.
Absolutely. What office are you working out at?
We're in Cypress, Texas. We're off of House High Road in Cypress, Texas, out there. And C&T Mortgage is the company, the broker shop that I'm with. I'm home loan officer who carries with C&T Mortgage. So we guys help you guys out, and we're local, so we're here to help you guys out. And I can lend anywhere within the state of Texas.
Awesome. So the state of Texas, guys. So if you have any inquiries on getting into the home loan process, you definitely want to reach out to a loan officer who cares, and actually tap his DMs and see exactly how you can go into the process. It might be a lot easier than you think. So now that we got the credibility out the way, let's talk more about the home loan process as a whole. So as I talked about in the last videos, 3 criteria off the gate for home loans, regardless of the type of home loan funding that you're looking to get into, whether it's FHA, whether it's conventional, whether it's VA, USDA. You have to have these 3 criteria. The first is credit, right?
Yes.
The second is the DTI, your debt to income ratio. And then you have to have a proper work history. You have to be on the job for 2 years minimum. We can definitely do different finagle of applications depending on the person and their job history, whether they're self-employed or whether they're actually working with an actual company, right? So those are the 3 things. Now, the debt to income ratio for the FHA process is what?
Around 55%.
55%. Now, what is the traditional debt to income ratio for a conventional loan?
Around 45%. 43 conservative, but around 45%.
So give me your perspective on the conventional versus a FHA type of loan product. What is the benefits? Give me a quick pro and con statement on how you feel on the difference between the FHA and the conventional and the benefits of it.
Okay, with the conventional, that you can do 3% down, you can do 5% down options, and with mortgage insurance, it goes away once the loan reaches 80% loan to value. With FHA, the mortgage insurance stays on the loan unless you put 10% down initially, and then if you put 10% down, then you pay mortgage insurance for 11 years on the loan. So that's the thing about it with the FHA. The difference is the mortgage insurance factors. You can save money over time with conventional, but if you have higher debt, then of course FHA is a good thing to get into, but you don't necessarily have to stay there.
Okay. So I did some research, and a lot of loan officers recommend for you to go into FHA initially just to get the process going and then refinance to conventional. Have you heard of that? That strategy? What do you think about that?
Well, a lot of times I think that strategy will work if that person has the wherewithal, the finances, and going to put enough money into that loan to pay it down enough to meet the conventional financing guidelines. So if that person is willing, if the loan officer is guiding them through that process, that's easy. But if they're not guiding them, they're just putting FHA out there just because it's an easier product, lesser restrictive guidelines, things of that nature, then that's unfair to the borrower. So if you educate them on the process, because it's going to be a more expensive option because of mortgage insurance, things of that nature, right? So if you're not educating the borrower, then you put them at a disadvantage.
What is the criteria for an FHA loan? How can you get one with a low credit score?
Well, the lower credit score FHA, they have some options out here now where you can do 500 credit score, you put 10% down. Okay, then you can do a 580 credit score, 3.5% down.
Okay,
so
that's a big difference.
That's a big difference.
So let's transition into credit right quick, because a 500 credit score can get you in the door for a home loan, correct?
Yes.
If you have 10% down. So if you looking to buy a home loan in Detroit or Gary, Indiana, or something like that, you can get those home loans relatively like $80,000, $70,000. 10% of that is not that bad.
Yeah.
But you don't want to aim for that. You don't want to aim for a 500 credit score. And that actually, let me transition over to credit repair, guys. If you have anything on your credit report as far as derogatories, if you have any late payments, charge-offs, medical bills, anything that's derogatory, go over to mycreditapproved.com. It's the software that I was talking about that allows you to put this full experience into your own hands, guys. It allows you to actually write your own custom dispute strategy in letters that allow you to remove it yourself. The credit repair industry is changing. So you definitely want to put yourself in a position to actually remove these items yourself, guys. Go to mycreditapproved.com, because as you can see, 500 and a 580 gives you a dramatic difference in availability of what you can actually ask at closing, right? Versus a 3.5% putting down versus 10%, just by actually bringing your score up 80 points. So guys, if you have any derogatories, or if your score is down or is dragging down because of derogatories, guys, go to mycreditapproved.com and get those items taken care of. Now, what is your ideal FHA applicant? What did that look like?
Man, my ideal FHA applicant looks like the 2 year of the history of the job, W-2 employment, or self-employed, or just steady income. Okay, we have the credit. 640 is pretty much a sweet spot that you want to kind of be at, especially with the rates rising environment that we have right now. You can get in low, but again, of course, it's going to cost you in the end, right? So have the assets there, have some reserves saved up, three to 6 months of the mortgage payment saved up, along with your monthly bills and stuff like that. So those are the ideal client that has a reserve, that has the assets, that has the credit, and then now they're not coming in looking for anything, and if anything does happen, it's just going to be extra. So have the down payment, the closing costs, just have that assets, just be in that good position, and if not in that position immediately, be willing to listen to the information and the knowledge, and then go back and execute it and go from there.
Awesome. What about student loans? Because I do know FHA is a government insured back loan, right? So I know that student loans can be a hindrance if you go into additional government funding outside of student loans not being paid, right?
Yes.
So give me a full rundown on student loans and what is the criteria for getting approved if you have defaulted or student loans in general.
Okay, if you default on your student loan, you definitely want to get those out of default, because it's going to affect you. Even if you go through credit repair and get some of those student loans taken off your credit, we run what they call a KRIS report, and that report is going to show any governmental debt that you have. So there's really no getting away around that. So really, you've kind of wasted your money by putting that, getting that credit report, getting those off of there, because it's going to come up. Okay. Right. Now, if you have payments on it, or you making a minimum payment, what you want to do is that if you're doing an FHA loan, if you're making a minimum payment, what they're going to calculate is 0.5% of the balance of that student loan, or the payments that you're making, whichever one is greater. That's the one they're going to to use as far as a payment. Okay, say if you don't have anything set up, nothing established, no kind of payment plan, nothing like that, say it's deferred. Okay, not in default, but just deferred to where you're not making any payments, then we count a 0.5% of that balance towards your debt to income ratio. So that's how those student loans are calculated. But if they're in default, as we said in the beginning, definitely get those out of default, because you can't get an FHA loan with student loans in default, because how the underwriting out of government looks at it, they're going to come after you after that, and then your assets, home, will be in trouble because of that debt. So they want you to be in a good situation.
So guys, there is no wrap around or get around from the student loans if you are going into this particular line of funding. Is conventional have the same stringent guidelines when it comes to student loans?
With conventional with student loans is that if you have on an income-based repayment plan with student loans, if that payment shows 0 on a conventional loan, we show 0 as your monthly payment. But if you don't have anything set up as far as they're in deferment, if you will, 1% of that balance is counted in the conventional case versus the 0.5% with FHA.
Right. So guys, you want to make sure that the student loans is taken care of. There is no get around, no get quick way of getting around the student loans. You want to make sure that you actually get those taken care of before going to the pre-approval process. Okay.
Yes.
What about self-employed? Self-employed individuals that want to go into the FHA. I know we talked about self-employed last time, but we didn't talk about FHA particularly. Who can get approved that's actually self-employed going into FHA funding?
The 2-year person that's self-employed that doesn't write off a lot on their taxes, that'll be the ideal one to go into, because they use that available income, your adjusted gross income. That's what they use. And so if you have a nice amount of that left and they can balance that out, that makes it an ideal candidate for the FHA, because they can just go by your returns versus having to do the bank statement option, because that's a non-QM program to where Fannie and Freddie can't sell those loans, or Ginnie Mae in the case. So
what's the difference between a 580 and a 640?
Oh, the difference is between the loan level price adjustments, because each loan, each rate, each credit score have loan level price adjustments, and those adjustments are higher the lower the credit score is. So the lower the credit score, the adjustments are higher. Like just say, for example, if the credit score is 580 to 620, whatever the range, then the adjustment would be 1.25. Just say if the credit score is now 640, 620 to 640 now, that adjustment may be 1. You see what I mean, though? So now those adjustments start coming off of your pricing on the back end, because every rates, if I can bore you with a second, every rates, what happens that they come with a credit, they come with a cost, or they come with, they come with nothing at all. And so those adjustments come off of that rate. You see what I mean? Off of those credits, the pricing that comes off the end. Right. So you want those adjustments to be as less as possible. Thus, come in with the highest credit score as possible. So 500 is available, but will it be the best option for you in the long run?
So basically what he's saying is, in order to get the highest potential of what you have available to you, you have to have the highest potential credit profile possible. The highest potential credit profile that you bring to the table, the best adjustment rate that you will actually get from the back end. Now, you can get an approval, but it's the difference between getting approval and getting the highest potential approval that you can possibly get. So guys, like I said, go over to mycreditapproval.com if you have any derogatories to get those items actually taken care of. What about mortgage insurance? Okay, and then we'll wrap it up on mortgage insurance. We'll do a quick overview, and then we'll wrap it up on mortgage insurance. What about mortgage insurance for FHA?
Mortgage insurance for FHA is 1.75% initially down of the sales price of the home, the value, and then also you have to pay a 0.85% mortgage insurance factor that's calculated into your monthly mortgage payment. Every monthly mortgage payment consists of principal, interest, taxes, insurance, and HOAs. Right. So that's going to be a factor into your mortgage. And so that's going to affect, definitely your monthly mortgage payment and out of pocket. If you put down the 10% or so, 10% initially, then that factor is 0.80 rather than the 0.85. So it goes down a little bit, and mortgage insurance is paid for 11 years in that case versus for the life of the loan. If you put 3.5% down, then you have to pay mortgage insurance for the life of the loan unless you refinance into a conventional product.
All right. So let's do a quick overview. We have credit. The credit needs to be at the 500 minimum, but at 500 minimum, you're going to get a range of a 10% down payment option. 580 gives you a 3.5% down payment option, and anything above that is going to give you a better potential adjustment rate going forward. Correct? correct?
Yes, sir.
All right. So, and then we talk about the DTI. The DTI is very important, guys. Now, the DTI is your debt to income ratio, which is basically how much you're actually spending versus how much you're actually bringing in, right? So you don't want to go out and buy a new furniture before you get the property. You don't want to go out and get new vehicles to pull up in the new property. You want to make sure that your credit profile is looking like your expenses is as minimum as possible before you actually go into the position into the pre-approval process, because the less expenses that you have and the more income that you can get, the more affordability that you can afford on the loan. Am I correct?
Ability to repay.
Ability to repay.
Sorry,
you just said it different.
Kind of with a swallow that water. Okay. Ability to repay.
I just want to make sure I'm getting the people, give my audience what it is.
Yes, I definitely appreciate that.
No, absolutely. And then we're going to talk about the work history, right? The work history is above 2 years or more. And we want to make sure that you are actually bringing to the table matches your employment history. Now, when I say employment history, I don't mean working, getting cash. I'm not talking about that. I'm talking about actually having history on the books and making sure that you're actually having a W-2 type income.
Yeah.
Right.
And also too, though, let me elaborate on that a little bit. In the income, because we need 2 years, that's not necessarily 2 years at the same company, just 2 years of the same type of employment.
Oh, that's a good nugget, guys.
Yes.
So you can have multiple employers, but you just want to make sure that you have 2 years steady income coming in where there's no lapses.
In that field.
Right, in that field. And if the lapses happen, then that's when you want to call.
Letter of explanation.
That's when you want to call the loan officer who cares, tell him your situation, and then he'll actually finagle it for you, put it and push it through. Now I'm just playing. But you just
we would look at the numbers and we would see what they show. We would definitely see what they show.
We'll make sure that your story match the outline of what you're saying. But
yes, we do whatever we can.
Yeah, but absolutely. So those are the basic guidelines for getting approved. Now the FHA, like I said, now is there any zone requirements for getting approved for FHA? Can you get a new build with an FHA loan?
Yeah, you can get a new build and everything. It's just the loan amount is going to be different based upon the county. So different county limits and stuff. So based upon the county, zip code, things of that nature would determine the maximum FHA limit.
What is the max FHA loan you can get?
Like 4 something, 5 something, 6 something. Just all depends on the county. You
can get a jumbo loan with an FHA?
Not necessarily. You can get jumbo. They stop at a certain amount. They stop at a certain amount to where they don't want them to be jumbo. So they have like certain limits, whatever, that they max them out. But they can get up in the 6 and the 7s, just depending upon the county that you are, can still fall up under that FHA conforming limit guidelines.
Oh, wow. Yeah. All right, guys, if you found any of this information helpful, if you found any of these meat potatoes, guys, please, like I said, like and subscribe to the channel. It allows us to keep these lights on, and it allows us to actually get pushed within the YouTube algorithm, actually to go into a wider audience as well, guys. We really don't have anything else unless you have anything, guys. Tell them exactly where you from, who you are again, and close us out.
Absolutely. Loan Officer Who Cares. You can find me on Instagram at Loan Officer Who Cares, Facebook at Loan Officer Who Cares, my website www.loanofficerwhocares.com. You go there to schedule a 15-minute strategy session. I'm easy to find, ready to help you guys out and to explain the mortgage process to you. NMLS number 1117854, and I am an equal housing lender. Thank you guys for your time.
Awesome. All right, guys. Until next time, take care of yourself and take care of your credit. Credit Coach Q out.